Hi Anubhav, thank you so much and good morning to you. How are you reading into the recent macro data that's coming in from the US and its subsequent impact on India?
Hi. Thanks, Karunya. So, recent macro data which flow in from US were softer than expected. If you're looking at ISM survey or job openings data, so intuitively it is seen as a case where demand is expected to moderate, which can probably pull down inflation, and this may help central bank or the Fed to pivot. But we think that it's too early to go to that assumption because it's just one set of data. We need to watchful for non-farm payroll data as well as inflation data before the next Fed meeting. Secondly, in the recent past also, we have seen that the Fed may have got into impression that a major part of rate hike is over or we are close to neutral rate, only to find out that the core inflation has actually firmed up. Given by the recent experience as well as the lessons of 70s, I think the Fed is positioned itself for looking for more credible evidence of inflation going down, and then only probably it will give some kind of signaling that monetary tightening is easing off.
Okay, all right. But I just wanted to also understand OPEC, OPEC scenario here and its impact on the markets because they've cut down oil production. So what does it mean for price levels going forward, and how do we stand to be impacted by that, if at all?
As far as OPEC Plus announcement that they are going to cut down by 2 million barrels per day from November onwards, it's higher than what the street was penciling in. And to our opinion, it probably compensates for the kind of demand slowdown as far as oil is concerned, more than compensates that. And that's why we are seeing firming up in the oil prices. What is also supporting oil prices is that inventory levels have come down, SPR level in US has gone down, and there's an expectation that China's demand should improve. So even before this development, our house view was that oil prices are expected to remain elevated. It can probably touch 100 because of the supply side rigidities. And so in that way, this is one level which will not let inflation to go down substantially unless there is a demand destruction.
Okay, all right. So given this context of US macros, oil situation, how should retail investors in India position themselves?
So for Indian market, interestingly, for last 5 to 6 weeks, we have seen a kind of an outperformance, and this outperformance size is quite noticeable because it's of the order of 10% compared to S&P 500, which gives an impression that Indian market has decoupled. But we don't think it's a sustainable proposition because as we know, because of trade flows as well as fund flows, and also the macro situation which we just discussed on the oil front as for inflation, probably India being a major importing country as far as the energy is concerned probably would be impacted. So, and what also doesn't help the Indian market is the high valuation on absolute and relative basis. But having said that, we need to appreciate resilient domestic macro, because if you look at the high frequency data, whether it is GST collection, e-expressway toll collection, or auto sales number, credit growth numbers, they all have been quite good in recent past, and which gives so given that background, I think what retail investors can do is be selective on some of the names which from the sector which are domestic oriented, say for financials, auto ancillaries, QSR retail, domestic pharma, those kind of sectors.
Okay,
it's a very
all right.
Selective
so,
yeah.
Absolutely. But in the selective market, especially with the earnings also starting next week, Anubhav, what are the things to watch out for, or any particular sectors to watch out for this time around who could be outliers in the earnings season?
Q2 results would be interesting mainly from this backdrop that, compared to earlier quarters, of course, the oil prices have come down substantially from 130 levels to 80, 90 range. Prices of a lot of raw material, so to say, chemicals, metal, they have substantially declined. At the same time, freight cost has also declined substantially in the last few months. In fact, they are quite close to the levels which used to prevail before pandemic, even though the shipping logistic cost of operation is still higher. I think there's a case for lower operating costs. There's a case for lower raw material cost as well. But what will get compensated, get offset by is the fact that a lot of companies have high cost inventory. So the gain, as far as the Q2 results are concerned, may not be that material. The other thing to watch out, of course, would be export exposure for individual companies, how the order book is shaping up, particularly from Europe. Yeah.
Okay. All right. Anubhav, thank you so much for joining in and for sharing your readings and assessment of the market and how retail investors could possibly position themselves. All right, let's change gears and once again focus in on the technicals. And of course, you've sent us a lot of your queries, so we'll get to addressing that as well with Gaurav Bissa. Gaurav, the first query that I want to take up is from the fertilizer space. In fact, there are two queries. One is from Raju. He wants your view on UPL with respect to the October expiry series specifically. And the other is from Varun, who wants your view on Chambal fertilizer. Can you tell us how the two stocks are looking on the technicals and if any of them make for an interesting bet?
See, if you want to look for the entire October series or the remaining part of the October series, then I think the charts will have to be looked on daily time frame. For UPL, it's stuck in the range where we are seeing a falling trend line hurdle at area of 780, 775. On the other hand, there's a good support area at 620. So on that perspective, I will say it's not a stock that one should be keeping for the entire month, and it's going to be difficult for that as well, given the kind of hurdle scenario we are in. If you look at the hourly charts, then yes, we are seeing good breakout sort of happening. So one can keep a stop loss of around 670, 673, even 675, and you can play for target of around 712, 715. So I think that can be a better play for UPL. As far as Chambal fertilizer is concerned, similar setup is coming in where the breakouts will be seen above 323, 324. So any hourly close above 323, you can play for targets of 335, 340, keeping the stop loss at 315.
Okay, all right. Moving on to the next query. This is from Santosh Kumar. He wants your advice on Trident. Small cap name, there's a lot of trader interest typically in this counter. Talk to us about how it's looking and where it could be headed.
It has been seeing one quarter consolidation happening, and the stock has not done too much. You can say it's trading near the support area, but I think that's the only positive where in last three occasions, this is the fourth one, where the stock has come towards 35 levels and it is sustaining those levels. So you can keep that as a stop loss and you can play for trading bounce towards maybe 39, 40. But beyond that, I would not look at it. You have to be a little bit skeptical because so far it has been underperforming. It's trading below all the major moving averages. So play at best for technical bounce.
Okay, all right. Couple of our viewers are writing to us on Zomato. One of them is Trilok. I saw another comment as well on the live engagement. This is from Raja. Both of them actually want your view on Zomato for the short and long term, both. The stock recently once again sort of reclaimed, that 60 rupees mark, comfortably above that level actually. Talk to us about how you think it will play out in the near and the long term.
See, for long term, I would not be the right person to answer because it has a limited history. It's 1 year old stock. So long term, I can't comment looking at a limited history in the chart. For short term, one can keep a stop loss of 58. It gave a breakout retest on those levels. The two swing lows around 58, you can keep that as a stop loss. The pace would increase once it gives a close above 69. Once it gives a close above 69, it can head towards the level of 74, 75. So on that perspective, one can buy, one can hold if early buying. For short term. Okay.
The next query is coming in from Sagar and he wants the view on TTK Prestige for the short term. A decent up move seen actually in the counter last, couple of months, 2.5 months, wherein it has gained about 100 rupees on the upside. Is that momentum going to continue or could there be further some sluggishness before the stock meaningfully picks up?
This setup is quite interesting. It was in trading a range in a consolidation manner, and we have seen the stock bouncing after making a breakout retest. The supports were around 915, 910. At this stage, it will be too deep a stop loss, but there's a rising tail end support as well. One can keep a stop loss of 950, and if these levels are sustained, the stock can head towards the level of 1060.
Okay, all right. Funny is sending us a message. He's asking if it's a good time to add LG Balakrishnan to one's portfolio. What do you think, Gaurav?
If you're looking for a long-term horizon, if you're looking at portfolio, then I would say it's a good stock. The pace would increase once it gives a weekly close above levels of 760. We can then see a very strong upside, but it's a good stock to add in portfolio. The structure is interesting. Small cup handle pattern formation happening. Breakout is yet to happen, but as I said, 760 weekly close, it can see very strong upside. So on that perspective, yes, it can be bought for portfolio.
Okay, all right. The next question is from Rajesh. He wants your view on Tata Motors. It's, come off a fair bit from its 52-week high and the kind of strong momentum that it saw in the earlier part of the year. Right now, trading just above that 400 level, Gaurav. Do you think good time to enter into Tata Motors or there could be further pain?
If you are looking for short term, then you will have to play for swings because it's stuck in the range. There was a very strong hurdle at 460 area. There's a good support at 375, 380 area, and it's trading in between those levels. On the other hand, on a very short term basis, it's been consolidating, making multiple lows, but not breaching the 390 mark decisively. So you can keep that as a stop loss. You can probably play for 425, 430 kind of levels. Auto space as a whole is not looking that weak. So on that perspective, the index can give a push, but it's not going to be my top pick among the auto names. But one can buy at the current juncture, keeping the stop loss at 390.
Okay, all right. In fact, M&M was also popping up on the live feed. Can you talk to us about M&M as well? Is it looking a better place than a Tata Motors perhaps?
Definitely. So if you're looking for a Mahindra, I think that has a much better structure. It has been a clear outperformer. If you look at Nifty Auto, Eicher Motors, TVS Motor, Mahindra, these three were the clear outperformers among the major F&O names. And the stock is bouncing back positively from 55 exponential moving on daily charts. One can keep a stop loss of 1230 by Mahindra. If this is sustained, it can make a dash towards 1320 again.
Okay, all right. Another heavyweight that I would like you to address is Infosys. Next week onwards, the earnings will also start trickling in. So ahead of that, are the technicals hinting to something, or do you think Infy and the entire IT pack perhaps will remain under the weather?
As a matter of fact, we made a small note for our clients, the HNI clients as well as the institutional clients about IT space being one of the better performers for next few weeks, if not months. So it is looking interesting. It can move, the IT space can move another 4 to 5% from here. I can comment on how the numbers can come and how it will impact, but technically stocks are not looking weak. We have seen positive developments in all the names, even IT index as well. So in IT index looks quite interesting. Though I might not buy Infy at this stage because it's up 50-60 points after we came out with the note, but nevertheless, the structure remains positive.
Okay. We're getting a lot of queries on Tata Group companies actually. Praveen Kumar is writing to us. He wants your view on Tata Elxsi. There's also Nishant who wants Tata Power, your advice on Tata Power. So if you could talk to us about both of these stocks, very different sectors, but a lot of interest in Tata companies as always. So go ahead, Gaurav, Tata Elxsi and Power.
Tata Elxsi, I'll be skeptical, though I am positive on IT, but that does not mean that every stock will see very strong performance. So if you look at Tata Elxsi, we have seen a rising channel breakdown happening. The stock is trading below 55 EMA and 89 EMA. So I would skip the name, and it declines towards 8,000. Probably that will make it very lucrative, very interesting. But at 8,500, I would not be too interested in entering Tata Elxsi. As far as Tata Power is concerned, that is something that one can buy for more of a trading perspective. There's a good consolidation happening on hourly charts. A close about 220, hourly close about 220. I think one can buy for target price of 230, keeping the stop loss at 214.
Okay. How about your own, favorite picks in the market? What are the stocks you are keeping on your watch list, Gaurav?
The first name would be CDSL. So if you look at the daily chart of CDSL, it gave a very strong breakout, a triangle breakout sort of, and we have seen a retest happening. It's now trading above the confluence of 55 and 89 exponential moving average. So as long as it sustains 1200, we can see a very sharp upside in CDSL. When we keep a stop loss of 1200, play for targets of 1350. Another one would be Coal India. This is an interesting name for the reason that there was a very strong breakout that we saw happening at 210. We witnessed a move about 230. It made a retest of this breakout zone, bounced back from 89 exponential moving average. One can keep stop loss of 210, play for targets of 240. Once it gives a close about 240, we can see 260 as well. The structure is very interesting in Coal India.
Okay, so there you have it. CDSL and Coal India, 2 picks coming in from Gaurav Pissa. Thank you so much, Gaurav, for joining in and helping our viewers out, sharing your own picks and giving us a sense of where the markets are headed in terms of technicals. With that, we're going to wrap it up right here on Morning Trade. Thank you so much for tuning in.